If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, then check this out. Simply use the promo code A1Live, that's A1Live, for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream. Good morning, guys. Hope you're all doing well. I'm just writing something in my notes here. We are red on the day. My goodness, we've got a downside slide for Nasdaq. Take a look at this. You're down 1.75% here. Tech stocks, again, getting battered here. And I'm going to go out on a whim and say that it's probably semis. Yeah, look at this. Semiconductors down, what is that, 3.55% here this morning. Hold on, I'm off center. You've got gold holding up okay. You've got S&P 500 here down 0.8%. The dollar is flat on the day. VIX is up 10% today. So this is a bit of volatility coming in. And take a look at oil. Oil looks like it's posturing for another possible run to the upside here. Bit of a bull flag pattern forming on oil. Excuse me. So you do have some interesting developments here. You've got Bitcoin down 1%, which is mild on the day, to be fair. You've got the 10-year yield lower, which you would think would be boosting stocks, but it seems like obviously you've got some bigger concerns out there. I mean, this is that's some no joke selling going on. You've got just a considerable move lower here in NAS. You've got Dow Jones moving down here. I'm watching that one. The S&P 500 is also falling. And I have to say, this is the first time I'm actually seeing some broad weakness. Like we've seen really recently the concentration be selling on the Nasdaq, which has been interesting. Like it's been, Nasdaq has been the heaviest of the group. And yet you have simultaneously, you have now stock market S&P 500 showing a little bit of weakness to perhaps join the sell party, I guess. So we'll see. Any currencies? Of course, we will also be taking a look at currencies as well. Although I have to say the channel has moved a little bit further away from Forex. To be honest, the interest in my audience and in my own trading lies a little bit more heavily in what's going on with gold and Nasdaq and the dollar index. So that is generally where we're going to spend most of our time. Speaking of gold here, where are we at? Well, we're sitting right there, smack dab at the bottom end of the range. And yesterday's close was not encouraging for the bulls. That is for sure. Take a look at this from a daily chart perspective. And you are talking about a return back down to actually yesterday's close was the lowest close of 2026. We are talking about peak to trough. This is a no joke drawdown for the gold perma bulls out there. I mean, this is you're looking at 29% down. So that's been a rough one. And a lot of people, of course, they use leverage and they, they're not just using, cash in their portfolio. So this could be, doubled and tripled for some people if they were leverage longs at the top. And unfortunately, the market has a amazing ability to convince people that it's never going to stop going up, or in this case, it's never going to stop going down. People get very, very emotionally tied to the direction of the chart, and they think, I had someone yesterday who was commenting in my comment section that they were really angry at people who are selling gold. Not even me, because I'm not selling gold, but they were frustrated. They're like, if people would just stop selling gold, it's impossible for bulls to get anything going because every time it goes up, the sellers just smack it back down. And I understand the frustration because trading is just difficult in general, but that is the reality of markets, is that when sellers are in control, that's what they're going to do. Sellers are going to take it. They're going to keep selling it. They're going to push it down lower. I've also seen a large number of people who are like, kind of vouching for, yeah, the paper market's down, but the physical market, I'm going to go buy physical gold. And hey, do your thing. I think long term, if you like precious metals, you could look into physical metals if that's something that you're interested in. Obviously, not financial advice, but when we're looking at metals here in the short term, understand it can keep going lower. Like, there is nothing to say. I've seen a lot of that sentiment floating around. People saying, gold can't go any lower. Like, this is unbelievable that it's done this. But guys, we're just back to October levels. Like, let's be practical for a second. Yes, it has been a wild 2026, but if we take a pause and we just think about, like, how much have we really destroyed in value for gold? The answer is not actually that much. Now, on a nominal basis, trillions, like a lot of money. I get that. Currency, right? But on an absolute basis, we're just pulling back to some long-term levels. And if we get on like the weekly chart, right? It is very painful when a pullback finally starts, especially for people who, may have been a little bit impatient and bought a little too much gold too soon, right? There's a lot of people like that. I understand those mistakes are normal. We have all made them. I have certainly made them. But you start getting these pullbacks and it's like, they look like Armageddon. But then you look at the longer time frames, and for people who aren't using margin and aren't leveraged to the tippy top, they're looking at this and they're like, okay, yeah, that makes sense. It could keep going for a little bit. That's perfectly fine. If you're a long-term bull, you're looking at, 3,400, not as a devastation event, right? But as all right, hey, it could happen. It's going to happen sometimes. You're going to get market resets. Understand, gold has pullbacks just like stocks, just like everything else. Over here, this was about a 22%. That was fairly mild pullback during that period of time. Going back in 2011, this thing crashed by 45.5%. And that was after a fantastic run up. So if we were to have a similar 45% pullback, where would that put us? That'd put us down at 3,100, right? I know a lot of people would be like, that would be devastating. But understand, like, that's what markets do. Unfortunately, they are not a nice, it's a soulless, it's a heartless beast, is gold and markets in general. So please be careful out there. Please understand that if you're leveraged on an idea, the problem with leverage is that you are incorporating that you cannot be very wrong at all. And if you are, it's going to get ugly fast. That is where I am a big fan of not using any leverage personally. I don't use any leverage. Sure, does it slow down my potential gains? Yeah. And I have people who will, I do these periodic reviews of my trading performance on my YouTube channel. And people, especially after like I've had a good trading period or good stretch, people will ask me the question. They'll say, well, Nick, you're up 20% or 30% on the year or whatever. Why don't you just leverage that? Why don't you triple X leverage that? And then you're looking at 60 to 90% gains on the year. And in that moment, I'm thinking, yeah, you're right. I should have done that. But in true experience, true fashion of having done this for a long time, I also know that there's periods of times where everything I touch is not right, right? We're all going to be right sometimes. We're all going to be wrong sometimes. And guess what? If you employ leverage, you don't have much wiggle room to be wrong. And I don't know about you, but if I'm being really honest with myself, there are times when I'm just dead wrong on markets, right? And so if I know that, oh, and by the way, that's everybody, whether they'll admit it or not. Nobody knows with certainty what markets are going to do all the time. It's a common misconception about great traders. They don't know what the market's going to do all the time. They have educated guesses. They're managing risk. They're trading around a system, but their system fails them sometimes, just like every other system. Nothing's perfect. Otherwise, everyone would be trading. Trading's hard, okay? And that is I think about that sometimes. I'm like, what is the good that I'm doing on my YouTube channel? Well, obviously, I think some people who take this seriously may actually genuinely learn insightful things from my experience and from my trading here. But at the very least, I think about it, I'm like, hopefully for the average person who is unfortunately going to lose money markets and then quit, hopefully I at least help them to think about how difficult trading actually is before they proceed, right? I think about that. I'm like, that's something that I think is an honorable thing that I can do. Now, I'm crazy enough to have spent 10 years of my life obsessed with this stuff and have become profitable through blood, sweat, and tears, man. This stuff is hard. But I think about that. I'm like, a lot of people, they're done in 3 months. Like they quit trading after 3 months because this stuff is really difficult. It's understandable. Well, if this is not your passion, move on for sure. It's too hard, right? But if you really like this stuff, there's a chance with a lot of work you can get there. Anyways, I've been blabbering here. Let's look at some more markets. Gold is fading this morning rally already. Look at this. Gold just, my goodness, man, it just cannot catch a break. My GDX short put position's probably not looking great today, but it's honestly, it's not a big deal for me because my short put position is a long-term accumulation. Like I'm dollar cost averaging on GDX. I want this thing to be going lower, to be completely honest. I want it to keep going lower because then I can actually build my position that I want to build on a longer term basis. I'm looking at levels like GDX. If gold keeps crashing lower, I'm going to build here. I'm going to build here. I'm going to build here. And I'm happy to do that because I'm not using leverage and a lower price doesn't scare me. It excites me. I'm like, heck yes. I like gold for the long term. Gold miners that I think are, some really quality businesses out there. You give me that discount, I think those are on sale and I'll buy some shares at lower prices. It's not a short-term trade, but it's a long-term bet that I think I'm willing to make personally. Again, not financial advice, just sharing my thoughts. Nick, you and your team actually made me a profitable trader at last, and I have been in quite a few communities following other people, etc. This channel actually makes a difference. Great work, guys. Jeremy, thank you very much for the positive feedback. I just want to let you know that was you, man. You put in the work. Congratulations to you. I can't do anything for you in terms of making other people profitable. I'm not here to tell people what to do with their trades. It was you, man. I'm really thrilled that if you're watching my videos, if you're listening to the live stream hosts that come on to the A1 Trading Show each day, and you're picking up nuggets of information that are helping you, I am thrilled. But it was you. That's your hard work that gets you there. You can listen, you can learn from what people are doing, but ultimately you put in the work. So shout out to you. Thank you for the positive words. And I'm glad that the channel is helping. I'm a gold bull. From my long-term investing perspective, I've been dollar cost averaging or pound cost averaging on SGLN, which is a UK gold ETF since February. I've got just under 2K and happy to buy more. See, this is what I mean. There's different types of gold bulls out there. Like I'm a long-term precious metals bull. Short-term, to be completely honest, technicals just look so bleak. It's hard for me to see a meaningful rally right here, right now. Hopefully, maybe I'm wrong, but I just continue to kind of be neutral and watching gold price here. Long-term, I like the idea of accumulating it. Personally, look at that. Gold's red on the day now, guys. Look at how quickly that dropped. Like, it's almost like the New York session. The bulls just see a little bit of green on the screen. They say, "Oh, you saw green? Green who?" I think you spotted a leprechaun because that B word is gone, right? We're red on the day again. Look at that down. Oh my goodness. Gold is just melting here into the New York session. So silver's also down 0.8%. Oil's pushing higher here, guys. Wow. 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 Yeah. Crazy. I have the Edge Finder too. Jeremy, man, love to hear it. I have to say just real quick, cool thing that happened to me yesterday. So we dropped this new feature, and actually it might be useful to look at today. Our new put call wall stuff that we built. I received so many really cool messages. People who are like pumped up about options data. And I'm like, dude, my people, if I had known how interested people would be in the options stuff, we would have done it a long time ago. I kind of went out on a whim because I'm like, I don't think my audience really cares about, and I think, to be fair, My audience here doesn't really care that much about options trading, but my audience here clearly cares about using the options market to find trades. And that gets me hype because I'm like, this is cool. So we have expirations today going crazy, which for those of you who are not options traders, a lot of options, they expire today, and that's going to cause a lot of potential interesting moves. Look at gold. So gold has a big put wall here at 360. We've kept our eye on this level, and I think this is worth keeping an eye on today. So GLD is an ETF that we track very regularly for gold, okay? So I've actually been mapping this out with my trading view. So I'm going to go out on a whim today and say that I think most likely, oh guys, this is interesting. You ready for this? I'm excited to talk about this. All right. What we've got on the screen right now is the put and call walls as shown here, okay? The put call walls, what the heck are we talking about? Is this a foreign language? Kind of. Options is like a whole nother universe. But check this out. The put and call walls just show us where there's huge clusters of puts and calls. Now, why does that matter? Well, this is the market maker in action. We might as well call this tool the market maker tracker. Like you can see what orders out there are doing. So check this out. At 360, there is a ton of open interest on the put side. What does that mean? Well, GLD, I know you don't necessarily have to trade this. If you're someone outside of the US, you probably do not trade GLD. It's a ETF for gold shares, okay? But it's a huge, highly liquid traded asset, okay? So check this out. At 360, there's a ton of puts. We call that the put wall. The put wall is just south of where we are by about, and it's going to be the same for XAU USD. It's about 1.2% lower from here, okay? So what that's telling you is that with the expiration being today, it's telling you that if you did get a shoot down to that level, there's probably a good chance that we would get some kind of a bounce today, right? Now, we might not go near there, but I'm saying that if we do go near there, the market maker who sold those puts probably does not want, and when I say the market maker, I'm talking about the collective, because there's many firms out there who are selling puts on GLD, okay? So they've sold puts out here. If you sell puts, you ideally don't really want them to be in the money because then you have to cover and buy the underlying shares, okay? Without getting too options heavy, basically, this is a huge level of support as shown by the options market. So if we were to equate that and move over to XAU USD for a second, that's telling you that like 1.25% below this major support level, there is another one, okay? Like down here, right around here, let's call it 39.25, okay? 39.25 is a major level of interest from a market maker's perspective to keep it above there, okay? Just a way to read that, okay? And some days is more interesting than other one. Some days are more interesting than other days when it comes to the put call wall stuff. But I think checking our levels here is really important because you know what? This is not guesswork. This is straight up. We have the data from the options market itself. We know where open orders are. We have interest on our screen right now, right? We also know, we can also check, and I'm going to be doing this a lot more. I think people have been appreciating the options chart reading. My goodness, guys, look at this. Put volume is going insane. I have to say that that is telling me, just from what the options data is telling me here, a bounce on gold seems possible. Now, it's not something I place a trade off of because if you know my channel and you know my trading well, you know that's not all I need in order to take trades. However, what this seems to be suggesting to me, you have overwhelming bearish sentiment. You have massive put orders on our put call wall just south at that 360 on GLD. It's like 1% lower from here. So you have a put wall, so that's a huge support level. You have the crowd sentiment seemingly chasing off a cliff. Can we confirm it in the put call? Look at this. So put call ratio is also back to very high levels. So the way we just read that, we just looked at a bunch of options data, specifically on GLD, which is a great representative of gold. And what we came to the conclusion of is sentiment is in the absolute dumpster. People think this thing's going to crater lower from here. That's where people are positioned. Now, oftentimes, the market loves to play gotcha, as we always say on the channel. So if everyone thinks like, oh yeah, gold's due for a huge crater lower, what I'm pointing to is like, all right, the crowd is positioned for a crash. Oftentimes when the crowd is positioned for something, there's a disappointment factor. I'm not taking a gold long because of this, because again, I also like to look at macro fundamentals. I would like to see what the commitment of traders data tells us this afternoon. That is coming out. We'll have that data in the screener as well pretty soon. But right now, fundamentals here, I'm actually leaning more in the direction of looking for a breakout. Now, I know I talked about this yesterday and the day before. Watching for the breakout doesn't mean I'm long. Like, I'm still waiting for the breakout. If we get a turnaround story here and we get one of these guys, I love that setup, but we don't have it yet. So I have no pending buys. I have no, breakout setups just yet. I'm still sitting on the sidelines here. Does that mean we can't flush lower? No, we could, but I think probably, this is my opinion, probably we have limited downside and we are closer to a bottom than we are to the top. Okay. That's my opinion. I could be dead wrong, and I will update and adjust based on the new information that I find. Hey, if you want access to the Edge Finder, now's your chance to get it 40% off. On the screen right now, you can see a QR code. If you scan that, you'll be connected to a member of our team. Let me just double check that that is taking you to the right place. I'm going to scan it myself. So let's see. Does that take you to? It should work. Yeah. Okay. It works. Yep. So if you're interested in getting access to Edge Finder for our 40% off discount that we're doing right now, again, all of our options data, all of our institutional COT trading tracking data, all of our macro fundamentals, all of our asset scorecards, economic scanners, all of it is yours. It is a one-time payment to get access to our tool. We do that intentionally. It is not a subscription service. I say this all the time, but I think like everyone has a million subscriptions nowadays. So we're trying to do something cool, which is we offer the price one time. You just pay for access, and then we continuously support it because there's always new people who want access to Edge Finder. That supports our maintenance costs and our products. And continuous development. I mean, there's staff behind the scenes here. So if you are interested in getting access, now is a great chance to do so at a very low cost. The Dow Jones was one that I want to watch currently. Dow Jones has got a strong reading and stronger than NAS and stronger than S&P. So I am intrigued by this. If I take a look at Dow Jones real quick, flip the chart over here. Look at this. We're coming down into potentially a sweet spot for me. I may be interested in taking a stab long on the Dow today. If I take that trade, I'll share it inside of our Discord, but I'm watching this area here. I also am really intrigued by this area here, 51,500 and 52,200. Both of those levels look like potential continuation trade setups. I actually alerted this to members yesterday. So I am going to watch it today out the gate. New York session or stock market opens up in 30 minutes. I'd like to see what that looks like. But there is a potential opportunity here, in my view, for a couple trades. I've got a couple stuff pending here. Pound dollar and Dow Jones are both ones that I'm watching. I'm watching pound dollar actually to the upside. So pound dollar here pulling back into some support levels. If I look at the 4-hour chart, this one also looks pretty clean in my view. I lean bullish on it. At least I did yesterday. Let's check if I still do. If I go, I'm going to go Forex scorecard. Yeah. So pound dollar is probably a trade for me. Please understand when I say that, I am not here to share financial advice. Please be careful. I recognize that newer people are watching these streams. Just because I have an idea does not mean that I'm going to be right. There are oftentimes, ask my comment section, where I'm dead wrong and people love to tease me about it. Hey, trading is hard, man. Like you try getting up here and presenting your ideas publicly. It's a little harder than it looks, I gotta say. But hey, to be honest, I have a system. I stick to it. I don't really care. Like somebody was telling me yesterday, I always get a kick out of these. Somebody told me yesterday, Nick, if you had just been following my comments every day, you'd be making money right now. And I'm like, man, you are watching my videos, commenting on my videos, watching me, telling me that I should just stop what I'm doing and just read your comments on my videos to know what I should be doing next. And it's very possible that they're right. Like I could have just copied what they were doing and made money for a couple of days, but that's not sustainable. You have to have a system of your own that you've tested, that you know thoroughly, that you know well, and you're prepared for drawdowns and mistakes and things like that. If you don't know what you're doing, if you're just copying someone off of YouTube or copying someone in the comment section, please seek some help. Where's the Michael Jordan meme when you need it? Get some help, right? Like, come on, man. We are, if you want to be a trader, do not try and copy your way to success. It will end very poorly, okay? Now you might say, well, Nick, you offer a signal service. Isn't that just telling people to copy and paste what you do? Absolutely not. If you go to our website, if you explore our VIP group, this is a subtle, really good advertisement I'm about to do. Check this out. If you go to our group, I don't want you to sign up for our group if you are somebody who is just looking for profits every day, instant success. I'm just going to copy it. We put it on our thing, right? We say a note before joining us. Trade insights shared by our analysts are intended for educational purposes only and should not be copied without careful consideration. We encourage all traders to conduct their own research and make independent decisions. Our community's goal is to equip you with knowledge and resources to succeed independently. And that's it, right? Like we are not here to try and promise that trading is easy. This stuff is ridiculously difficult. And it's a constant effort to keep going and improving and becoming a better trader. It's not something that you can just copy your way to success on. And honestly, the best way, if you don't want to put in work in your trading and you just want to, sit back and copy someone else, like, honestly, I think you are better off just buying a diversified ETF fund or ETF, for the long term, like an index fund, because that's just going to get you exposure to some of the best companies in the world. And if you sit back and wait, you might get 10% a year for, over the longer stretch. If you get a good stretch, if you get a bad stretch, you might get minus 2% per year on average. But we've had a really good, people are now, that's a big pet peeve of mine, is people, believe that index investing just gets you an easy 10+% per year. And while long term, that has been the case, you have to understand that there are also times like the 2000s where, if you go back monthly, if you had bought, what is this, 2007? Let's go SPY, the most popular ETF in the world. Like if you just bought SPY right here in 1999, right? What is that? 11 years later, you're break even. And if you add in inflation, you're much lower. So it's not as easy as just buy and hold. But if you don't want to put in the work, you should definitely not try and copy people. You should probably just buy and invest in long-term stuff that is slow and steady and safe, right? Not safe doesn't really exist in markets, but safer than trying to trade, I would argue. So, yeah. Nick makes more money from videos than trading. That is true. Not from videos, but I have a 10-person staff. We run a software business. And actually, it depends. There are times where I make more money from trading than my business. There are other times, but to be honest, like I'm working insane. Like I need to chill. I need to chill in terms of how many hours, because this stuff is like, I'm working more than a 9-to-5, like way more. I used to work in software engineering for years before I do trade. I do genuinely make money trading. I've shown my broker statements numerous times. It is a huge part of my income. but I make money doing both. And I have to say, I put more. Okay, let me actually say this. Time spent, I make way more money trading, but I spend way more time content creation, software development, managing my staff, etc. So there's the full answer. But again, I have nothing. I'm never trying to mislead people or this is a business. This channel is 100% a business. We build tools that I know are genuinely valuable for so many traders around the world. That wakes me up with excited every day. Like I said this the other day. I wake up and I jump out of bed and I'm like pumped to get new updates to you guys for Edge Finder users. It is very fulfilling. The emails and messages and people who love our tools, who are suggesting new features, like that's exciting for me. Like that is a thrill. It's been a lot of fun to build these things. But yes, I make money from trading, from the videos, from selling software. Like you'll never catch me trying to act like I don't make money from those things. Like I'm not going to gaslight you to think it's not a business. It totally is. But it's a business, I think, built on proven trading results, honesty, trying to build stuff that genuinely helps traders because it's what I use every day. Multiple streams is the way. I think everyone should. Not everyone wants to be on YouTube getting, their trades criticized by people, but finding other ways to make income, 100% you should be doing that. Like trading is a wonderful way to scale, but it's a terrible way to solely make money, in my opinion, because trading is very like let me show you. Okay. I'm going to show you my broker. Let me show you what I mean by it's inconsistent. Now understand guys, this is 10 years into doing this. Okay. 10 years, constant, dealing with drawdowns, etc. And this is what it looks like. Okay. So if my only income was trading, I mean, I could do it now. January was phenomenal, but look at this. It's highly inconsistent. It's been a good year for me. Last year was a great year. The year before that was a great year. The year before that was a great year. 2022 was a terrible year. Okay. I ended the year red. So what I'm pointing to is that if trading was your only source of income, imagine if I was away from the desk in January, right? Because January was really good. I caught, an insane gold long that just never stopped. And I dream about it twice per night. Yes, 2 times per night. I dream about that gold trade. What I do is I purposely set an alarm at 2 a.m. to wake up so that I can start the dream over again and relive the gold glory trade that I had in January. Anyways, this is what I mean. This is why I don't think anybody should trade solely for a living unless I could now, after 10 years having done this, having built up capital, this is not my only brokerage account. Like I could do it now, but for a very long time, it would have just been so much more stressful than I needed it to be. And plus I love what I do in terms of building stuff, like softwares, etc. But like down 11K, up just 1K, up 50, nice, down 25, right? So, and who knows, maybe in August, I'm down 75. Like I could have a bad month. It happens. I've had months where I'm down 100K, right? Very rarely, but it happens. And so it's highly back and forth. So I don't think, in my opinion, it is wise to really just be like, yeah, no, I just trade for a living. It's easy money. Dude, no, it's not. It's hard money. It is the hardest easy money you've ever made in your life. Anyways, guys, that's all. My time is up. I've got to throw the show over to my friend, Mr. Alan Perez, who's going to take you guys through some more trading setups. Guys, market's rolling over here. Look at this. Nas headed for some retest of some major levels of support. Gold is red on the day. We were green briefly there. Like I said, it was like a leprechaun, right? Leprechauns are notoriously, they're green, but they're hard to find. The green was there and it has been squandered very quickly for gold. We'll keep an eye on that. Guys, like I said, 40% off for Edge Finder is going on right now. if you are interested in some tools, getting access to our stuff, all of it is on super sale right now. With that said, up next, we got Mr. Alan Perez taking over the stream. Stay tuned. If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free to join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. How are you guys doing? Hope you're having a great day. I was doing the workshop this morning, and we saw everything was in the red pretty much. Even yields. I mean, the 2-year yields starting to pick up a little bit, but everything was in the red. VIX is starting to wake up a little bit, but nonetheless, it's under 20. It's still quiet down there, but it's starting to wake up a little bit. Nasdaq is kind of what I'm looking at, the chart that I'm seeing here. A lot of optimism around the AI trade and everything, and I'm wondering if it's starting to get disrupted a little bit. That's kind of my honest takeaway. We do have this wedge here that we're kind of operating under, and we are starting to see a break lower. In fact, I talked about this on the Telegram channel yesterday in the chart markup. So if you are not in the Telegram channel, I would highly advise that you go ahead and join. It is completely free. I'm going to drop the link one more time in there. Completely free for you to join. Every single day we drop chart markups, polls, questions of the day, bonus content, a lot of stuff. It's just join. All right, you're gonna love it. So that's one of the things that I talked about yesterday. We'll start to see if this is the culprit. I think it's two things. I think it's probably tech worries, but it's also the price of oil too. Price of oil here starting to creep up. I would say up until this level of 84 is very likely. I would say. Here's what I'm thinking. This recent leg in oil to the downside was a one directional push, pretty much. Okay, so we haven't seen a pullback into oil, so it's unrealistic for us to think that you will see oil drop here and it will just stay flat. So a pullback is expected. In fact, if you move your fib from high to low there, the 61.8% retracement level lines up right there with that 85 handle. So it is probably expected that you go ahead and hit that 61.8 on oil. The question becomes, do bears step in and take it lower from there? Or does it just hang out there or break above? If it's the latter, then you have real problems because the inflation progress that we have just made with CPI and PPI likely starts to unwind. Okay, that's how I'm thinking about it. So ideally, you hit this 50 or the 61.8, sellers step in and take it lower. That's good for the inflation outlook, right? This is just a regular good old pullback, continuation lower. But if you don't get that, that's where you have some problems. Okay, so pretty important chart to look at. Yields, 2-year yield is something I was looking at as well. We have not once broken this trend line or tested it. And as of this week, we have broken below it. Now we are below the trend line, but we are not fully convicted yet. You don't have the full follow through. You're starting to see a little bit of a bump up today. We'll see how that continues. But ideally, my thought process is if you see a continuation lower with the US 2-year yield, then maybe the Fed or the market is pricing in instead of rate hikes, maybe rate holds. In fact, if we go to CME Fed Watch tool right here, you can see the probabilities unless something has changed. But as of this morning, you now have a likelihood of September being another rate hold. So remember, Monday of this week, we had July rate probabilities of a 45% chance of a rate hike. That has now gone down to 10% in a matter of 5 days. And then September was going to be the next time where you do a rate hike, right? So it was deferred to September. Now it's more likely that September will be a rate hold, not a rate hike. So now it's deferred to October of this year. There's a likelihood that now instead of this month, it's October that we're going to see a rate hike. So the rate probabilities are deferring out, which is kind of what Marco and I are thinking, that the Fed's just not going to hike rates. They're more or less just going to hold rates for a very long time. I think that would be the appropriate response. Unless inflation gets out of control, then at that point I completely understand. But for now, I'm thinking that inflation is tamed. Clearly, we saw that with the recent releases, right? We're trending lower. And so maybe rate holds is the best case scenario. Okay. So we're seeing that with the yield story and the probability. So again, if I see 2-year yields continue to roll over, that's good for dollar softness. And maybe you get some risk on. But right now, you're not seeing that. Right now, you're seeing oil stubbornly high, which again makes a lot of sense. This could very well just be a pullback and continuation lower. But until then, you don't know. The market is reacting very strongly here today, though. The Nasdaq, this was a level of support that I really like to go ahead and buy. However, now that you broke out of this wedge here, I think there's a possibility that you get lower. In fact, I would appreciate that. I would appreciate Nasdaq getting maybe up into 26,000, and at that point, I could take a better opportunity where you have the 200-day moving average acting as dynamic support. You have this level of resistance here previously, maybe turning into support as well. So I would prefer that. Let me go to the edge finder and see what it's looking like. So let's go to indices. Nasdaq, where are you? You're neutral. Okay, cool. So with a neutral score, there's two ways you could approach it, right? I'm going to approach it by just waiting for the deeper pullback if we get it. If we don't get it, that's fine. Had you had a bullish reading, then this probably would have been a good time to take a risk-defined opportunity to the upside, taking an initial stab at it. But because we don't have the edge finder reading bullish, then I'm going to hesitate. I'm going to wait for the deeper pullback. S&P 500, what does that look like? I would prefer S&P to get a pullback as well. Maybe 7,300 would probably be the one I'll look for. I do like just getting the broader market piece instead of being concentrated into or having more exposure into tech, because tech is the kind of the iffy, wonky one, I would say right now. So S&P looks a little bit better, but I would wait for the pullback into the 7,300 level. Same thing. Let's go to Edge Finder. It's a neutral score. So again, be patient with it. That's what I would say. Let's see. What else do I like? I like pound dollars to the long side as well. This is one of the things I was talking about in the call this morning. A pullback into the 1.3400 level would be wise, in my opinion. You have, let me remove this here for you guys. If I go to a 4-hour chart, you can see here that in this cluster where you have that 200-day moving average right there, you had a lot of kind of just stalling out there. I would say a lot of fighting between sellers and buyers. I think if you get a pullback here into pound dollar at this 200-day moving average, that would be a pretty good opportunity to take it to the upside. And then my stop loss would be, my risk to reward ratio wouldn't be the best, but that's okay. My stop loss would be below this level of structure. And then my take profit would be this recent high right here. That's what I would do. Now, I say this, that my entry point would be right here, is because we are seeing this upward trend here, and I think it could continue that way. But there's also a possibility that you get a retracement into here, and that's perfectly fine as well. In fact, if you put a Fibonacci from low to high, you can see here that if you get a pullback all the way into here, you're still at the 61.8. So the actual uptrend is still intact. But I'm thinking that there's going to be a more aggressive trend. So that's why my levels will look like this. Okay. Hey, Lane, why don't you take a look at Aussie CAD? Let's look at Aussie CAD. Aussie CAD. Ooh, look at Aussie CAD. What's going on over there? Aussie CAD was amazing to me this year. We are back at that level of support. Where's the edge finder show? Let's go to miners. Aussie CAD. Bearish reading of 4. Huh. Wouldn't take it. I would take this one to the upside, but not to the downside. Reason being is like you had a good number in Canada, right? You had the employment number come out well, but it wasn't enough. It's just one number out of a bigger basket of things that are going against it. So I'm going to go to USD CAD. I want to go long USD CAD if I get a meaningful dip into this 1.395 level or 1.39. That to me is a good pullback. And because I want to go long the dollar, short the CAD, I don't want to go long the CAD, short the Australian dollar. So I'd rather do long Aussie CAD instead of short dollar, or instead of short Aussie CAD. Now, the only thing against me here is that we have a bearish score on Aussie CAD. So I would be going against the grain there. So maybe I go long. Maybe I go short the CAD basket. But again, I would need to see broader edge finder kind of in that line, in that expectation, because when I went long the Aussie basket, it was literally everything Aussie was straight up strong, and so it made a lot of sense and it worked out fine. So let's look at this. Let's look what the CAD basket looks like. Okay, Aussie CAD bearish, Euro CAD bearish, dollar CAD bearish. So it's actually the opposite. It seems like the Canadian basket is, as of now, strong. So I don't want to short that. Or I don't want to go. I don't want to go long Aussie CAD is what I meant to say. Pound Aussie looks a lot better for long. I agree with you, man. I agree. I'm kind of on the fence between pound Aussie and pound Kiwi, to be honest with you. Let's go to pound Aussie. What gives me that hesitation right now is that we haven't confirmed the technical structure yet. So you have this level of resistance and this 200-day moving average, but you haven't overcame it yet. If we reflect on the early part of 2026, pound Aussie was straight up bearish, right? It was giving you no pullbacks. It was a very strong force. So right now, you are still technically, I would say, in a downtrend, right? So you have this level of resistance and this level of the 200-day moving average that you have to overcome. Until you overcome it, then I would love to pal into pound Aussie longs. Another thing that works with me as well is if you go to pound Aussie, it's getting a bullish reading of 4. So I like that as well. But again, I would need to see that technical overcome. If not, it's still a bearish trend in my opinion. I love pound Kiwi too, though. Looks really good. Although you are seeing some weakness today, absorbing this bullish candle. So I don't know how I feel about that. But the edge finder is getting a neutral rating as well. So not the best. So pound Kiwi, neutral. So here's the thing. Pound Aussie gives me the edge finder reading, but it lacks in the technical reading. Pound Kiwi gives me the technical reading, but it lacks the edge finder reading. So none of them is overwhelmingly better than the other, I would say. So with that, I hesitate. I like pound dollar, though. Pound dollar is both technical confirmation and fundamental confirmation, right? It's very bullish, and you are getting the technical pullback. And so for that reason, I would prefer pound dollar over the other ones. Does that make sense, guys? This water is ice cold, man. Let's see what else do I like. Kiwi dollar to the short side, I would like to, if you do get some dollar strength. In fact, if you were to see a scenario where oil continues to rise, it overcomes that 61.8% retracement level, and it's back above here, and inflation concerns come back, I would definitely short Kiwi dollar for sure. Kiwi dollar to the downside will make a lot of sense. Hey, Marco.
Hello, Alan. How are you?
Yeah, man. Happy Friday.
Yep. Happy Friday to you as well. So, what are you seeing today? Any action? I think it's pretty boring. It's pretty non-event. Let's say a non-event day, I would say.
I'm seeing a sea of red, man. That's what I'm looking at.
Yeah. I did get stopped out of my silver, so the positioning or the sort of the dollar bearishness does not seem to be working very well for me at the moment. GU is pulling back. Is that on your radar possibly?
Mm-hmm. It is
approaching a buy level.
Mm-hmm. Yeah, it is. I like it, but again, like to your point, is the dollar softness story really that strong as it once was? I think it has a potential to get disrupted. That's my my thought process there.
Yeah, things are not really acting as I would have expected them. With the cooler CPI, with the cooler PPI, it's kind of strange. So the price action is not really confirming. Just a second.
It's oil, man. That's what it is.
Oil?
Yeah, I
Yeah.
mean, like
Okay.
if
Mm-hmm.
if
Mm-hmm.
if it continues higher and it stays there, then the numbers that we saw this week are irrelevant.
Isn't the blockade active? I completely lost track of that. I mean, if the blockade is active, it means that Iran is not letting ships pass through. So we're basically getting the same situation as in April and May. I kind of completely put that on the back burner, but if the strait is actually closed again, well, kind of open but not to Iran, it's the same thing as being closed. What do you think about that? So,
I have no idea if it's open or not. In fact, I would ask the chat. I'm just like out of curiosity. Does anyone have a reliable tracker that you could reference? Because I definitely don't have one.
I don't
Like,
think there's a.
does it exist?
I don't think so. We
There's
do
got to
have a
be a
vendor.
guy. There's got to be a guy at the Strait of Hormuz. You see those memes, right? Where they're at the trading desk at the Strait of Hormuz. Like, there's got to be a
Yep.
guy that's out there that's actually like, maybe he's not trading, but he's monitoring. There's got
Yeah,
to be.
because like the last time it was closed, or the last time that the US had a blockade in, but then Iran stopped most of the ships coming through, you did have a lot of posts coming through on financial juice. And this time, there's not really a lot of posts. So that's what made me think, well, the strait is open, but it may not be open. So we need to jump on Twitter. I think like the Rev says it's closed. I think
Well,
Rev
look,
is
I can't
somewhere in.
trust Rev. I can't trust Rev because he said he was gonna fly over the Strait of Hormuz on a flight
Yep.
and send me a picture, and he
Mhm.
never sent me the picture. He said he was asleep. So Rev is an unreliable source.
So Rev is, I think, in the UAE, if I'm not mistaken.
Yeah, if I remember. Yeah, he said he slept. Whatever, man.
Yeah. So if someone is gonna know, it's gonna be Rev, and it makes sense. It makes sense. So it makes sense in the price of oil as well. It's definitely climbing up, climbing back up again. Grandma saw it, so we have
Supposedly.
the grandma indicator. Did you see the latest news that Trump is gonna be selling kind
API
of
access to
yeah
his through social.
so basically Trump will be having his own financial juice where you can subscribe to the premium option and get his news like in the same second, but all of the other feeds will be delayed, I'm guessing. So
I would, but like, it would actually make a lot of economical sense, and it'd be a good edge if the market like reacted to what he said. But it no longer does that. You know what I mean? Like,
yeah,
unless he says
yeah,
something crazy off the wall that's new, like, all right,
yeah.
troops are already landed, it's go time, then I don't think the market would react. I think the market doesn't like I was saying, we were saying yesterday, like the real edge is in the beginning of the conflict, not in the middle of the conflict. So API access, cool, but you know, he could say like yesterday he said something about Iran wants to make a deal. In fact, I think I can find it. Market moving. Let's see. Okay, for example, let's say you bought API access, right? You spent a bunch of money. Trump, Hormuz is open to all ship traffic except for Iran. Okay? When he said that, price was $78 a barrel. What is it now? $80, $81 a barrel. So
Yep.
it's like what he says doesn't mean much anymore. So I would say the API access is worthless.
Absolutely. And I think he's trying to maybe get in all of the suckers that are going to buy into it once it stopped working. So you know how something works until everyone learns about it and then it stops working. So I think it's gonna be the same thing for this if it actually happens.
Gold, right? Like gold and silver over here at this level, it was just moving straight up. All of a sudden you had lines out the door in the US. I don't know how it is in the EU, Marco, but lines out the door, pawn shops, whatever, these places where you can buy and sell physical gold.
Yeah.
Everyone was buying gold. Like everyone saying, "Oh, you got to buy gold, man. Like you're an idiot if you don't buy it." And this was around this time the top. So
I mean that's a classic.
once it's old news, it's old news, man. Yeah.
It's the same with Bitcoin. You know, when Bitcoin hits the mainstream, when it hits the news, when like I have my grandma indicator, so when she reads about it in the local news, it's the top. You know, it worked 2 times already. So yeah,
Yeah, yeah.
it's pretty much simple. But yeah, so what is on your radar at the moment? Because personally, I don't have much. I'm not super keen on just jumping in and then putting on a bunch of positions. I'm actually looking to be more patient, up maybe until the next Fed meeting. I'm looking for alpha that's not connected with the Middle East, and it's not much. You know, we may even scratch the rest of July off the list because just the uncertainty with the Middle East, the strait being closed again, we could flip back to risk off, back to massive risk off, you know, and structure positions on that. So bet maybe on the dollar gaining some value, doing what we did in March, April, May. But I've not yet made that pivot. I'm still pretty hesitant to take on more size.
I like dollar CAD to the long side, especially if you
Okay.
do start to reflip back into that long dollar story and inflation concerns start to come back into the picture. You're getting a really good pullback on dollar CAD right now. So the more it falls, the better for me. I like that 1.395 level.
Okay.
I also think like just taking the war out of the picture, fundamentally, I think the dollar still better than the CAD on a relative basis. I understand the inflation story has cooled off, and as of now, interest rate projections have dialed down meaningfully a little bit for US. But I think the base case is, or the hawkish case is, rate holds. And if we go to let me do this, economic data, interest rates, and you go to US and Canada, you still have a meaningful spread. It's actually been a very consistent spread that has widened in recent times. So 2024 was a lot tighter. It widened back in what was it? What is this? April of 2025, and it's been the same since then. So I like that. So I think dollar CAD on the medium to long term would be a good play to the upside. And then let's say you do include the inflation concerns and dollar gets a bit again, then that would only add more fuel to this trade.
Yep. I mean, it makes sense. So you're looking at maybe 1.39 to buy.
Yeah, anywhere in this level would be pretty good.
I think it makes sense. You know, it's all about being the fastest one to flip. And if this is actually going to be the time where oil goes back near 100 and we sort of get the Fed to actually commit to being hawkish because inflation will rise even more, then the fastest ones to pivot will make the most percentage. But I'm just so hesitant because I've spent the last, I don't know, 3 weeks talking about inflation coming down and a dovish Fed. So it's tough. It's tough to just flip on a dime. While the best traders, they do flip on a dime.
To your point, Marco, like July, the remaining of the month, probably a quiet month until you see something different. Like I'm on the same camp, and I'm open to that. You know, like if it is what it is, I have to be patient. And things start. Summer times are notoriously slow months anyway.
Yeah, I mean, summer is pretty slow. Summer is pretty slow.
So that's what I want to do. Someone asked, "What about USD CHF, bro? That thing is still right there. Like I don't know if I just cut it off or what, but again, it's fine. Like I'm kind of pivoting into like rate holds is the base case, so hopefully that is enough to keep dollar Swiss under pressure. Again, it's the oil story. If oil stays bid up, then this thing goes against me. But unless that doesn't happen, then I'm fine. But yeah, dollar Swiss just hanging out there, not doing much.
Yeah.
So yeah,
you're paying swaps.
I'm paying them.
Okay.
I'm paying them. I get the email every day.
You get an email as well. Oh, okay.
Yeah, they send you like a report every day or like a statement.
Yeah, a statement. Yep. Oh crap! I'm gonna have to check my statement because I'm also in some negative swaps positions, so I'm gonna have to check on that. But the stocks are quiet as well. I've been following the world of stocks, and look at this nasty candle on the Nas,
Yeah,
nasty
man.
candle on the S&P. We're gonna open in 1 minute, so the stock market will open in 1 minute. It's not looking good. So we're starting to break those EMAs, the 10, the 20, the 50, and looks like it's just a more quiet period. A great period maybe for selling rallies and shorting stocks, but for buying stocks, buying breakouts, really, really bad. So it's the time to be patient. Just one of those slower weeks, and I think it could continue by the end of July.
What do you think, Marco, about shorting the Nasdaq? The VIX has gone up to 15% or 14% now. If you were to get a break below this level of support, are you shorting that thing? Is that in your wheelhouse or no?
Not at the moment. So I think I've never actually went short on an index. So I would love to just stick to long setups and buying, and be patient when it's going lower and below the EMAs. But if there's a very cool opportunity, then I may take it. If all of the stars align, if it's very high probability, then I may go in. But right now, as it stands, I'm trying to find ways or reasons to do it, and I don't see much. The only reason to go in would be the Middle East and oil going back, let's say going up rather. And that is probably happening because the strait is actually closed, which I completely missed. I saw the financial juice print about Trump putting the blockade back, and I was like, it's nothing. It's just a couple of ships. But it's actually closed. So, and also let me show you something interesting. So, shout out to Max from the A1 Discord. If we go to Financial Juice, the print for today was, so PM Takaishi, government will pursue steps that encourage investment in Japanese financial assets, including by households, pension funds like GPIF. GPIF nimbly rebalances portfolio, such as by selling foreign assets, buying domestic assets when yen is weakening against the dollar. So it's actually going to happen. This is the PM. I think this is a big announcement. It should be in the red, but it's not, which is even better for us traders because we can take advantage of that. Now the question is, when will this start? So when will this rebalancing, buying domestic assets actually start? Swiss yen is the thing that I'm looking at to sell. UJ to sell, I think, would be too expensive, so I wouldn't want to do that. But Swiss yen, I think, would work because you can stay in the trade for weeks and months, depending on your broker, depending on your swaps. What do you think about this? Is it too long term for you? Would you want to first some sort of a confirmation on this sort of a trade idea? Is it not?
Yeah, I would. Let me look at the chart. I haven't looked at it yet.
Yep. Put her
this is my chart on Swiss yen. Basically trading in the channel right here. I would wait for a technical break lower. That's what I would wait for. What you're sacrificing by waiting for that would be, 225 pips. The only concern is that this thing has never rolled over, Yep. So that's the thing. Like, it's never rolled over. There's nothing I can reference. There's no well, this time it did this, and maybe if this happens, then similar, then it will work. So that's the tricky part. You've actually broken the 200 before, but then you ultimately pick it back up again. So that's so hard, Marco. I wish I had an answer for you. The obvious one to me, the obvious one to me would be a break of this one right here. But again, like, my thought process with anything yen related, for example, dollar yen, is I would actually be buyer on dips. So
okay, yep.
That kind of counteracts the Swiss yen or anything long yen kind of idea.
Yeah, and these higher oil prices are definitely not helping the Japanese government, who wants a stronger yen, because we know that Japan relies on the Middle East for its oil. And the importers of oil, well, they have yen and they need dollars. So essentially, if oil prices go up, their yen, they basically sell yen, buy dollars, and it weakens the yen even more because oil costs more dollars. So that's really not a good sign for UJ, and I would say the yen in general. That's another sort of negative for the trade idea that I have. Basically, for every sort of trade idea that I have at the moment, escalation in the Middle East is negative. So I need to find something that's opposite. I need to find a clear risk-off move.
That's tough, man. Everything is correlated. Everything is influenced by that. That's the thing. Like, where does the money escape? You know what I mean? And if things start to hit the fan and correlations go to zero, then that means everything gets hit at once. If there's really no pocket where you could escape from, then there's nothing you can really do at that point. You just have to accept that and wait for the smoke to clear out.
Well, maybe you can hide out in the dollar, as we have been doing. I did pretty well in March. I did pretty well. I think I bought some dollars in March and April, and it paid out. So hiding out in the dollar in cash, well, cash is dollar basically. So that could be a good trade. But I don't have enough conviction at the moment. I'm gonna have to check the edge finder as well, see if we are getting some bullish dollar reading on that. You mentioned USD CAD, could be a great option. Of course, we need a bit of a better level, but could be a good option, could be a good hedge against my other stuff.
Let's look at major pairs, so I can show you. The quite opposite: pound dollar bullish, Aussie dollar bullish, Kiwi dollar bullish, Euro dollar bullish, dollar Swiss bearish, USD CAD bearish. So it's like not even that, you know. But I would wait to see. Yeah.
Okay. Well, that's because of the recent inflation prints in the US. You know,
those 2 ticks lower there.
For the basically those ones. But anything else to add for today? I think we just need to wait for Monday.
Wait for Monday,
if we
man.
get something on the weekend. Yeah.
Now I want something to happen. I'm like, just give me something. No, man. That's pretty much it. And I'll go ahead and pivot out here so you can do your portion of the segment. I would say, guys,
yeah, sure.
Get yourself a copy of the Edge Finder. It is a 45% off summer sale right now. So definitely go ahead and jump on that. You can use code Marco or Alan, whichever one you prefer. This tool would really help you out in your trading. And also join the free Telegram channel. I'll put that link in the chat there just now. It is completely free for you to join. So all of our discount codes for prop firms, the Edge Finder, free analysis, free polls every single day. You guys will love it. But Marco, thank you for your time, man. I hope you have a good weekend. Relaxing. Are you gonna be at the seaside today or no?
This weekend is bad weather, so I'll stay in the capital and just work on trading, do some research on stocks. So yeah.
All right, man. Well, have a good one, man. Take it easy.
Have a great weekend as well, and I'm looking forward to Monday.
All right, take it easy. Bye bye.
See you. Goodbye. Let's continue. I do want to mention the sponsor of today's video. So if you're looking to get funded, also just a second for me to refill the water. Okay. So if you're looking to get funded, expand your trading capital. It's one of the main issues for retail traders. I know because I'm dealing with the same issue. Prop firms are a great option, but you need to be super careful. There's like 95% of them are shit. Ola Prime is vetted by the A1 team. And with the code A1 Live, you can get 20% off any challenge. Okay. Now, a couple of things I like about Ola Prime. First, they have a pretty good Trustpilot. So the first thing with any prop firm, I jump on the Trustpilot. I join the Discord. I see what's up in the Discord. I go to YouTube. I see if anyone has an experience with that prop firm. This one is pretty good. Pretty high score for this niche. Second thing I like is that they don't have a consistency rule. So for me as a swing trader, consistency rules are very tough, very, very tough to get around, because the main goal of my strategy is to keep the losses small, winners big. So 95%, 90% of my profits come from 10% of trades. And the consistency rule definitely screws that up. Holoprime doesn't have it. And the last part, you get a really good price with the code A1Live. Okay, so link is in the description. Do take a look, take advantage, and let us know how you like it. Join the Discord. Sluggy, hello. Watch the 2-year. It seems that the bond market are not buying the oil story. Really? Oh, this is actually pretty good. Thank you, Sluggy. I missed this, so this is pretty good. This is a good sign. I should have shown this to Alan. We're kind of breaking the trend line. It's good for my positioning. It's good for my story of being risk on, bearish dollar, bullish stocks, and that sort of an environment in general. What about the 10-year? Yeah, 10-year going down. What about the 20? 20. Same thing. Interesting. So gold, silver. I'm not seeing much here. I did get stopped out of my silver. Tried to take a stab long. Didn't work out. Part of the game. Corn, Ethereum, crypto rolling over. I mean, oil is definitely up. But this is weird. This is weird. So the 2-year should be up on the day. If we go to the plus, we put in Brent. New price scale. I know there's not going to be a massive sort of a massive correlation, but oil up should mean yields up. Okay. The interesting thing is Bank of Canada said in their last meeting that oil is not their concern and they remain dovish. Oil up, bonds down. That is weird. It is. And the meeting happened after escalation. Interesting. Okay. It was this week, right? So let me take a look. News. BOC. Yeah, it was on Wednesday. Kept rate the same. They remain dovish. Let's see, USD CAD. Can we do CAD yen? CAD yen. I think the yen should be a pretty strong currency. CAD yen going up. Okay, pretty funny, but USD CAD going down. Yeah. Okay. The most interesting thing for today is that 2-year. I would expect the 2-year to go up, and the 10-year to go up, and the 20-year to go up, but it's going down. What about TLT is up on the day? Weird. Okay. Feds Williams sees encouraging signs that inflation has likely peaked, but flags AI-driven price pressures. Typical Friday type of movement. True. Don't listen to anything coming from Canada. Check the highlights, Marco. You'll see. Okay, I'll take a look. What do you think of GPUSD? Nothing made sense this week. It was a tough week. Yeah. I have some stock positions. So what is interesting here is the SPY. The SPY is down, gapped lower actually. It's pretty bad, while some of my stocks are holding up fine. Like Best Buy, it's okay. Crocs actually look pretty well. RXO, this one I'm stopped out of, so this one I should remove from the list. Let's lock that. And let's put it below. KRC actually up on the day. D-Dog Do you have any other breakouts? I can't take anything. So just for this strategy, it's a very simple breakout strategy. But the key with the strategy is the SPY needs to be above the 10, the 20, the 50, and the 200 EMA. Okay, so that's the criteria for taking this breakout strategy. That's weird that some of these stocks are holding up, but hey, I'm not gonna complain. Let's see what else we have. Shitty week, shitty month. It's a tough week, kind of a tough month as well. Silver similar to gold. This month is still far better than March. I had a good March. I had a good April. It was volatile. So March and April, because of the war, there was a lot of volatility, and volatility is all that I need personally. So I did quite well. Now, GU. I did have a buy position, which I did close. It was a really nice winner. So actually, it was an okay month because of this trade. So I closed this one, and I'm looking to re-enter. So I'm looking to take another long position. We have pulled back now, so that's good. Maybe we pull back a little bit more. 200 EMA could be a nice level. Yeah, I'm not going to take a position on a Friday. I rarely take a new position on a Friday, so I'm probably going to wait for Monday, Tuesday next week. But if I had to pick, I would say GU is my top pick. Swiss yen, okay, Swiss yen, selling Swiss yen and buying GU. GPNZD, I'm going to remove it. I don't really like that anymore. So GU, I like it. I think it's a good opportunity. I also think the Edge Finder is bullish. So let me just check this and then I'll pass the stream to James. Let's see, top setups. GBP USD. Very bullish. It's great. By the way, Edge Finder is 45% off with the code Marco this month. So yeah, let's look for buy setups on GU, but let's be a bit patient when it comes to all of the other stuff. That's it from me. I wish you guys a great weekend. Relax, read some news, learn some new strategies, and don't force setups because the market conditions are not right at the moment. Yeah, I'll see you guys next week, and don't go anywhere because you have James coming on in 30 seconds. So that's it. Goodbye.
Today's video is sponsored by 8cap, and did you know you can actually get a free copy of Edge Finder with the help of 8cap? The way this works, basically, if you create an account under our referral link, which I'll have linked in the description down below this video, you can actually get a free copy because they purchase it on your behalf. Now, how this works is basically if you follow the link that you'll see on the screen right now, basically scroll down to where you can see all of the different offers that we have, where if you deposit a certain amount of money into a new 8cap account, they will effectively buy our products on your behalf so that they're free to you, you get them free, and you also start trading with 8cap. Please also make sure to do your own due diligence on 8cap to make sure that is a brokerage that meets your own risk criteria. All the information, like I said, can be found in the description down below about this specific sign-up offer. Thanks to 8cap for sponsoring today's content. Now back to the video.
Hello. Ladies and gentlemen, it's Friday. Hope you all had a wonderful week. How's everyone doing? Okay, right. What are we looking at today? Well, I'm not in such a boring position as I was for the past week and a little bit. Since pretty much last Friday, I've sat here and it's all just been, nothing going on. It's so boring. So I'm finally in a position on pound dollar. I think we discussed this one yesterday. So very simple entry, fib from the low to the high, entered on the retracement back into the fib, and also alignment on the left here with previous resistance. So break and retest, as always, hopefully you know the drill by now. Of course, oh, wait, hold on. I've lost my window. Where's it gone? Here. Of course, we do have pound dollar on the Edge Finder reading very bullish, actually, with a score of 9, which is fantastic to see. So everything really seems aligned for pound dollar. The US fundamentals are bearish. The pound is doing okay. Or the sterling UK economy is doing all right. What else do we have? Seasonality for pound dollar is not great though. So that's kind of really the only downside. I was also paying attention to the dollar or the DXY this morning. And something I really don't like actually is just the technical side. You know, as I said, the fundamentals aren't great. The technicals follow the fundamentals. So it's not a huge deal. But this to me just doesn't look great. So we've obviously got, you know, again, fib from the low to the high, pull back into the fib zone. And again, retesting previous structure on the left. So technically speaking, the dollar looks quite bullish actually. But of course, I'm not a technical trader, so it doesn't mean too much, but it is something I'm a little bit cautious of. I'm still in the pound Aussie trade. No, there's no update here. You know, had a bit of a retracement yesterday, hovering just above entry today. Really nothing going on there. And I decided to go in for a euro pound short on the 50% retracement into, sorry, not 50% retracement. It's actually a 61.8% retracement into the previous support level on the left here within this bearish trend. So on the edge finder, is pound Aussie still there? Pound Aussie is, but it has dropped a little bit. I can't remember what it was. I think it might have been 5 or 6, but it's now 4. So I might have to just cut the trade at break even, because my personal criteria when trading with the edge finder is it has to be, well, 6 and above is ideal. Anything sort of 5, 4, 3, it kind of doesn't really become worth my time, just because the fundamentals at that point become very sensitive to flipping back to neutral, or maybe even bearish, or obviously vice versa. So that's that. Euro pound does have a bearish reading with -5, and it's obviously in quite a large downtrend as well at the moment. So I think I'm quite happy with all the positions except pound Aussie. I'm probably going to cut that one after the stream. Actually, I've just noticed it's dropped off a bit. Boring better, James. Well, yeah, I suppose boring times do come, but they do go. I don't mind boring market periods, but it's obviously, you know, when you're doing streams or you've got to make content, all those types of things, it becomes very difficult when there's just nothing that I'm interested in doing or trading or paying attention to. You know what I mean? So that was the main problem. I see everyone bearish on the dollar. What's the thesis behind that, technically speaking? Technically nothing, but the majority of traders that are in the stream aren't technical traders. We're fundamental traders, because that is what moves the markets. So if we look at the US heat map here, now we did get lower inflation coming out for the US, which has sort of dampened the rate hike narrative that we had by the Fed, or the markets were anticipating, I should say. There is a lot of consensus, or a large consensus right now, that the CPI print or the inflation data for the US isn't true inflation. It doesn't mean that we're now going to see inflation trending to the downside or cooling off. But obviously, we as retail traders, we've got to take the data as the data is. We can obviously forecast and speculate and things, but that personally isn't my style. I'm not going to sit here and say, I think inflation next time is going to come out hotter because of X, Y, and Z. Or at least, I could say that or could think it, but I'm not going to trade off of that, because I'm not an analyst. I'm a trader at the end of the day. So I take the data at face value. Everything here is telling me that the dollar is a sell. So keep in mind, the dollar's fundamental score here used to be 100 roughly 3 weeks ago. Since that point, all it's done is drop. So we've had weaker labor data, we've had cooler inflation, we've had PMIs that came out slightly disappointing. Nothing drastic, but they did obviously disappoint compared to forecast, hence bearish reading. So that's the thesis behind the dollar short. And then we've also got obviously the top setups here: dollar CAD short, got dollar Swiss short, and then we've got pound dollar long, euro dollar long. So yeah, I mean, across the board, we can kind of see all these little signals popping up to potentially go short dollar and long on the pound dollar. Sorry, not on the pound dollar, but on the pound short dollar. So that's the thesis. But again, technically, as I said earlier, I actually think purely on price action, it does look quite bullish. However, with that said, we still need to see this 102 level break. So that's kind of my breaking point on the dollar. So if we do see 102 get broken above, retest and continuation type pattern, then obviously I'm going to step away, because then we really do have quite strong technical setups. At the moment, though, I still think there is an argument for lower prices on the dollar, maybe down towards 100, maybe 99. But of course, we'll see. We'll see. But yeah, that's the best I've got for you at the moment. It's just rest to taking institutional bid orders down to 1835. What are you talking about? Oh, on gold. Okay. First round sounds unrealistic and unreasonable, but for revaluation on gold, Real value takes time. Yes, I saw China doing that. I think we spoke about it a couple of weeks ago, but China increased margin requirements. I think it was margin requirements, if I remember correctly, massively on retail gold and leverage. And the reason they did that was because they wanted to see and find out what the real value of physical gold was, because the paper market was diluting the physical market. Obviously, China has a lot of gold. So, yeah, we'll see. But I think gold is still potentially a good buy. Now, we're holding 4,000 or around 4,000 really, really well. So I wouldn't necessarily want to go short. And I do actually have a little bit of a plan of DCAing long. I don't want to go into that too much yet because I don't want anyone to get swayed into that, because as we've said previously, you need a large bankroll to DCA on gold. It's not something that, you know, a $500 account will be able to do. And I mean that with the greatest respect. It's more just to keep me safe from backlash and keep you safe from monetary losses. But 4,000 and below, as I've said previously, I think some sort of DCA approach incrementally could be quite beneficial if you do have the bankroll, but that would have to be more of a investment approach rather than a short-term speculative trading approach. If we're talking about just, you know, normal swing trading, which is what we typically do on the stream, I don't really have anything for gold at the moment. It seems quite flat. So as we can see right here, when it loads, we've got a score of 1. So we can't do anything on gold right now. So we've got the jobs market's bearish, inflation's bullish, economic growth is very bullish, institutional positioning is neutral, and technical is bearish. But we've also what was I going to say? We've also got to account for the situation in the Middle East, oil, inflation, and so on, which is still a pressure on gold. So I don't think it's worth really being involved with just yet on a short-term side anyway. What is going on here? Let me just catch up with the chat. Did gold spike on the NY session open? Let's see. Did gold spike on the NY session open? It looks like it did. Yes. About 5 minutes into the session, it looks like we did have a pretty large spike. GBP AUD lower. Interesting idea. The problem is with the pound at the moment. Well, I keep saying the problem is I've noticed it when I'm editing my videos. I repeat words that don't really belong. Like I'll say again a lot, or the problem. It doesn't. Anyway, I'm rambling. But the thing is with the pound, I am actually quite bullish on the sterling at the moment. I hate to say it because I hate the UK. No, sorry, let me rephrase that. I hate the government in the UK and the economy or the economic situation. I don't hate the country. But we are seeing massive relief within the sterling at the moment. Let me just pull up some excuse me. Let me just pull up some notes to make sure I get this right, because I don't want to butcher it. Sterling is in the grip of a short squeeze driven by Shabima Mahmood's appointment as Chancellor, which removes fiscal expansion risk and attracts position unwinding from speculators holding the short side sterling position since 2017. The rally is primarily adjustment driven rather than fundamental reassessment of UK prospectus. Next week's Burnham transition, CPI release, and jobs data will be critical catalysts. Once position adjustment activity fades and investors return to the UK, macro and Bank of England story, the recent breakout gains may face a retest pressure. So this is basically what I was saying. I know I hope that made sense to some of you, but this kind of reinforces what I was saying. I think the pound is on a short-term rally based on kind of repricing, really. If you look at what's been happening in UK politics, specifically in politics, we had Keir Starmer that was, will he leave, won't he resign, what's going to happen there? The markets don't like uncertainty, and that was a very uncertain period. So now we've got confirmation that he is resigning, and it's almost guaranteed we're going to get Andy Burnham in. We also had some speculation about Chancellor. I think we had Ed Miliband at one point. Now it seems to be Shabima Mahmood. Maybe I'm butchering the name. I do apologize. So yeah, we're getting that stability back in the UK is what I'm trying to say. So I'll speed up that point. But yeah, that's what's driving it. But again, the fundamental, or how do I say it? The socioeconomic side of the UK is still a real problem in my book, but that's a very long-term play that I'm not going to put money on right now. Well, I'm a full technical trader. That's just my trading style over the years. That's what's kept me consistent. That's completely fine. I wasn't trying to put down technical traders. What I meant by people in the stream is like myself, Nick, Marco, everyone else that comes on, all the guests, I think, are all fundamental traders. But yeah, I wasn't trying to put down technical guys. This guy's mega danger. I appreciate that, but everyone on the stream contributes great value. You can hold GPAUD buy low, potentially. I don't really have much of a view on the Australian dollar at the moment. I think it's still stable, but I wouldn't say it's something that I'm necessarily interested in holding particularly. The reason I went in for pound Aussie is purely because it was on the edge finder, mainly on a GBP play rather than Australian dollar favored. Thoughts on the Nikkei? We can move on to Nikkei in a second. This guy seems based. Thank you very much, Leah Fox. Getting a lot of support today. That's nice to see. It's funny. It's real swings and roundabouts sometimes on stream. Some people will tell me to get off stream. And when's the next person coming on? And then sometimes we get people saying nice things. It's always good. Keeps me on my toes. Keeps my ego in check. Anyway, the Nikkei. So when it comes to the risk markets, we'll call them, indices markets particularly, but global indices, Nikkei, FTSE, S&P, DAX, so on and so on. I don't really see much of an edge in these markets whatsoever, primarily because of the sort of market rotation we're seeing. We've seen oil take a massive dominant position in sort of the rotation map, if you will, whereas risk markets like the Nikkei, the S&P, Nasdaq, DAX, FTSE, they've all taken a real backseat. They're really not doing too much. So the Nikkei on the H4, in my opinion, is relatively untradeable. There is an idea, and this is purely on a technical side, there is maybe an idea of going short on a retracement back into the previous low. And that would give, very basic bread and butter setup, break, retest, continuation lower. Maybe there's that type of idea for the technical people here. I don't do that. Again, I'm not pure. I like to have fundamentals on top of that. So it's not for me. However, the daily time frame seems a little bit more optimistic for the bulls. So we are at this previous daily low, and actually a little bit of previous resistance as well. And we are seeing rejection off the 100 daily moving average. So it, again, depends on what your approach is and things, but I think there is an argument for being a buyer and a seller on different timeframes. On a fundamental side, I don't see anything. I think, let me just double check. I don't want to double down on that thing and be completely wrong. Actually, I am kind of wrong. The Nikkei does have a -4 reading. So I think maybe the H4 idea that we just covered, the break and retest, might be a little bit more valid. But again, that daily time frame is just a little bit of a concern if I was being short. I just use the force. Use the force to trade? Like Star Wars? Be both tech and fundamental. Yeah, that's the way I like to do it, because the amount of times where you'll see one of them doing what, in fact, yesterday, this week has been a great example of that, where we've had bullish fundamentals or bearish technicals or vice versa, and it's really difficult. And the easiest thing to do is just to not do anything. But obviously, mentally, the easiest thing to do is actually just keep jumping in trades, trying to catch something. But yeah, it is what it is. No offense taken. Didn't strike me in that way. I just wanted to get your side of why you traded against dollar bullishness. Yeah, no problem. Glad we're cool. James, you're rambling again. It's a habit. Although I think we're going to get a timetable change on the streams. I might be doing the 1 hour segments again at some point. I hope this isn't private information. I don't think it is. So if any of the OGs remember, I used to do 1 hour slots. So hopefully you like my rambling, because you might be in for a lot more of it soon. I'm a very experienced trader, not here to learn, just curious because this channel came on my feed last week. So I've been tuning in. Fantastic. That's what I love to hear. Yeah, I think, to be honest, even if you are experienced or you're new, it doesn't really matter. I think it's quite rare, really, to find decent fundamental content on social media. You can get various stuff about red folder news and sort of the very basic stuff. But, I think that's Trader Nick specifically, the streams and the videos, I think is a real unfilled niche that he's managed to capitalize on, which is amazing. Hi, I've just joined the stream. Could you take a look at the fundamentals for US 100 if you haven't? Yeah, for sure. So it goes back to what I was saying earlier. Obviously, as you said, you were new to the stream, but what I was saying on the markets in general, indices markets in general, is that I just don't see anything. So the Nasdaq here is getting a score of 0. So fundamentally, there is no drivers or no significant driver, bullish or bearish. So that doesn't give me anything. On the technical side here, the daily is stuck sideways. We've broken below the 50 daily moving average. We're coming into the 100. I suppose there is maybe an idea of being a buyer at support if that's something you do. Personally, again, I don't do that, but maybe there is something like that. On the H4, I think there is a little bit more of an interesting approach here. So it depends. Again, there's no fundamentals to back this up, but just based on technicals, there's kind of two approaches you could maybe look for. One of which would be fib from the high to the low. We've just started a bearish trend on the H4, pull back into the fib and continuation lower. That would be a bit more aggressive. Or this one I actually don't mind. Maybe I would take very low risk if there's something that warrants taking the short position. Is a break below this level of previous support or the current support, retest into that, and then a continuation lower. That seems okay. So I think maybe some shorts based on just trends and technicals, but yeah, I'm not seeing a huge deal here. GU up more sense. Yeah, I do think pound dollar bullishness makes more sense at the moment. I think we are seeing repricing in the dollar. I don't think we're seeing a huge deal or a huge amount of repricing because, again, as I said earlier, I think there's a lot of speculation around the CPI print at the moment of likelihood of CPI coming back up in the near future due to obviously depleting oil reserves, the situation in the Middle East still ongoing, and so on and so on. Thoughts on UK 100? It's exactly the same as the Nasdaq and the Nikkei. I'm not going to go over that one again because it's exactly the same. Let me just double check. But yeah, I mean, sideways price action. There's no trend here. I don't think there's really much. I think actually, is there a bullish reading on the FTSE if I remember right? Okay, never mind. Ignore what I just said. I was completely wrong. I take back what I said. The UK 100 is getting a bullish reading with a score of 8, actually. So maybe there is something here to pay attention to. I do apologize. I jumped the gun there. So the daily time frame, technically speaking, is bullish with the moving average formation. The H4 is still kind of range bound. I wouldn't really want to trade into this. So I think the criteria for me to start looking for a trade would be a breakout. So just break these previous highs, create a new high, pull back, higher low, and then continuation. That's really all I've got for you on the FTSE at the moment. Hi, James. What do you think about Aussie US dollar long is currently making H4 fib rejection? Okay, Christoph, I'll take a look at that. Learning gold fundamentals will make understand the markets better. Well, gold doesn't have fundamentals. I'm going to assume you mean the dollar fundamentals, but yeah, I mean, fundamentals in general make you, I would personally think, make you a better trader because, you know, more awareness generally isn't a bad thing. Anyway, what we're saying here, Aussie US dollar long on the fib rejection on the H4, right? That's my bread and butter. Love to hear that. Looks pretty good on the fib. Actually, I do like this. The slight downside is, I suppose, the trend here kind of is still bearish. I mean, we're in a bit of an inflection zone with the trend maybe flipping bullish here, but that's a little bit of a warning sign. However, I wouldn't take that too literally because, we are seeing dollar weakness. So maybe just to capitalize on that idea and possibly get into this trend quite early, maybe a long position back into the previous highs at, two. We could say 0.72, just a nice round number for ease. So maybe something like this wouldn't be too bad. Do we have anything on the edge finder, though, is the question. We do, actually. You know what, Christoph? Maybe you've just given me an idea. Aussie US dollar, very bullish, score of 7. Love to see that. And again, the technicals look quite good on the H4. Daily, the daily looks good. We've just rejected the 200 moving average here. A little bit of a problem is the 50 and the 100 moving average rejection acts as a slight dynamic resistance here. So I think the entry would have to be a little bit premature and quite aggressive if you were interested in this. But I think the overall idea is completely fine. I do know fundamentals to the TLO from a guy named Ken. I've seen Ken. I think he's pretty good. I'm not sure his background, but I think he's quite experienced. So if you want to improve your trading fundamentals and stay away from scalping, yeah, scalping's tricky. I mean, it can be very, very good if you've got a real system in place, but yeah, it's definitely not for definitely not something for the weak or the inexperienced. Please don't call me sir. I appreciate the respect on it, but James is fine. Where would you be comfortable entering a buy on gold? Well, this is the tricky thing. So it's a little bit hard to say because I don't think gold is worth buying right now, especially on short term. Again, if we're speaking longer term DCA, sort of investment approach, I do think gold is worth buying. But obviously, from a swing trading perspective right now over the next couple of weeks, I think it's a little bit risky to be buying here. It's just because this level is so obvious. So it could be a situation of, because this level is so obvious, everyone's buying in and actually just doesn't work out and everyone stops a hit. Or it could be a situation of, actually it's so obvious, gold just rallies from here. And I know that's not very helpful. But when we get these really clear levels, it's a little bit, makes me a little bit cautious. So there is that idea that I'm a little bit cautious around this level. The other thing is, as I said, there is still speculation around the inflation data in the US still picking up again in the future. We've still got the situation with Iran and oil flows, which is still a pressure on gold. However, that's the bear case. A bull case, we do have the dollar weakening. We did have lower CPI, and there is potential that we see the Fed hikes continue to get unpriced or unwound in the market. So I think there is a little bit of an argument to be a buyer and a seller of gold at the moment, which is why I'm finding it a bit tricky to really answer your question. But if we want to boil it down, simplify it, buy only, where would I want to get in? Well, I think maybe a very low risk buy at around 4,000 would be okay, with a relatively tight stop under here. And again, low risk, very, very conservative. Or I think the better idea is actually just waiting for price to develop. If we see the trend start to change here on the H4, then we could look to get in on the next pullback. And then at least we've got a change of trend. That would be at least something for us to go from. But yeah, at the moment, I think it's just too risky. 1.36 of perspective. I've got no idea what you're talking about. Do you mean on pound dollar? Gold likes to flush weak hands. Yeah, gold is a volatile beast. In brief, I'm a short-term swing trader. I don't scalp at all. Technicals is 80% of trading decisions for the past 3 years. I think it's fine. I think technicals can work, but I think it's a little bit more complicated than people make out. So I used to have a guy in my community that was just a technical trader. He used to just buy support, sell resistance. All he did. He had negative risk to reward, but he ended up funded, I think, 700,000 between prop firms. He was taking tens of thousands in payouts. It was a really unorthodox strategy. Well, no, not unorthodox. It was a strategy you would expect from a very, very new trader, but he used it and he was very, very successful with it. So I think technicals are something that is quite an individual thing, whereas fundamentals are not individual. It is data. You can't really argue against it, which is why I like it, because it is what it is. So yeah, I think it really is just a personal decision and how you operate and think about things. I have B in 39.68, maybe up to 40.50 or 4,050. Yeah, I think gold buys are like I said, I think there is an argument to be long and short gold. So I'm not going to sit here and try and tell you one direction over the other, because I would be, I'd be lying to you and I'd be lying to myself. That's not what I like to do. So personally, I don't have a bias, because again, when I'm getting pulled in two directions or I've got two different ideas, it's not worth me trying to do something, because if I get it right, okay, great. But if I get it wrong, it's like, oh, well, I was right on the other idea. I should have done that. And then it's just not good. So yeah, I'm going to stay away from gold. I think there's just better opportunities. Like I really like pound dollar. I don't know where my drawings have got. Oh, there we go. So yeah, pound dollar longs I think are really good. The Aussie US dollar longs, I also think that was quite a good idea, but it's a little bit too early for me. Pound Aussie, I'm going to scrap this one after the stream. And Euro pound I also quite like at the moment. We might see a bit of a deeper retracement in Euro pound. I might get stopped out in this one as we maybe see a pullback towards the 200 moving average. If so, fine. You know, what can I do about that? But yeah, we'll see. Fundamentals, direction, technical entries. That's the general rule I follow. Yeah. Overall, I've been short gold this week, but technicals help me catch some good longs. To me, they feel more real. More real time, where fundamentals feel more of a future indicator. Yeah, that is also a good point. I think the lower time frame you trade, the more difficult it is to be a fundamental trader. I'm just keeping an eye on the time. I've got 1 minute left, I think, here. But yeah, I think if you're a scalper, fundamentals become relatively useless. The main thing you'd want to pay attention to is like, breaking news and headlines and things. But yeah, if you're maybe H1, H4, daily, weekly, monthly, fundamentals become, in my opinion, a non-negotiable to a certain extent. Anyway, ladies and gentlemen, I'm going to head off because we have Tiger coming to take over the show. Don't go anywhere. Tiger is coming to take over. You're in great hands with him. Guys, stay safe. Don't get margin called. And I'll see you all on Monday. Enjoy your weekends. Thank you for being here.
If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, then check this out. Simply use the promo code A1Live, that's A1Live, for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream.
Whoa, what's going on, everybody? How are you doing? Happy Friday. Great day by default, as always. Every single Friday is because we're one step closer to relaxing and unplugging, spending time at the pool, hanging out with our families, whatever the case is. It's always a good chance to reset so we can come back stronger the next week. So as always, guys, if you would, please let me know if you have any specific tickers in the chat there. Excuse me. Anything you're looking at in particular, we can definitely take a look at the top setups. One thing I was just kind of marveling at was the decline of the dollar over here on our surprise index. Guys, as always, you can select whatever currency you want to add on to the list over here. You can just, it's pretty interactive. So, but just taking a look at the dollar, I just put it through this date here since that's where we started being at 100% beat rate back on June 25th. Just a slow, miserable decline of the dollar. There it goes. And that right there, ladies and gents, is why it's pretty well fallen for the most part off on my bullish list and neutral and pretty much bearish at this point if we're just isolating the fundamentals. So there you go. As mentioned yesterday, it's down there in the basement, having a basement party with Australia at 40% beat rate. And that right there was part of the reason I was curious about your thoughts yesterday on the if an intervention would stick this time with dollar yen, with yen being at the top. So anyway, that is a look at that. Canada and the yen and the euro still 1, 2, and 3 as we speak. As far as the major currency pairs, fundamental perspective. So coming on over here to the top setups, we got pound dollar still at the top. I think we're getting pretty close to a possible zone of demand. I'd be interested in on that. UK 100, the FTSE there is now the third strongest. So I've got a potential master pattern move on that on a small time frame. So I did want to take a quick look at that for you guys as well, just to give you an idea. Every time you guys hear me blabbering on about confirmation entries, I think we might have a pretty good looking setup on that. So that was one I definitely wanted to show you guys. And let's see over here on the chat. Trend rather than reversals. Yep. Da bang, I like that. Stick with the trend. Trend is your friend till the bend at the end. Wait for the reversal to prove itself, change a character, retrace, find some new support resistance. That could possibly be the start of the opposite trend. So no, that's good stuff. Yeah, you can't. Yeah, we have to take losses, guys. Whether we're trend traders, whether we're trying to catch falling knives or stop rocket ships from going to the moon and Mars and beyond, we take losses. But remember, you're going to learn more in a loss than you will for all of us collectively teaching you or showing you how to do this or that. The losses are your best teacher. If you learn one thing today, that's it. Okay, it's the cost of doing business. Just like any business you start or any investment that you have to do. You go to get a new job. So maybe if it's construction, you got to go get your tools. You got to get boots. I'm sure companies cover a lot of that, but there's always something inevitably we got to pay for to get a new job or whatever the case is, not to mention going to school or college or whatever the case. So you're going to have a lot of investment. Trading is no different. The losses are our investment into our education. Okay. So if you look at it from that point of view, I promise you, you'll get to a point to where those losses don't bother you. It doesn't bother any of us on this channel, guys. Yeah, we don't like to take losses, but we inevitably always learn a lesson no matter how long you've been in this game. So embrace the losses and embrace the winners. Okay. The point is, whenever you get to you'll get to a certain point to where it really doesn't, for the most part, it doesn't bother your blood flow whether we take a win or a loss, right? We're not here for excitement. We're just here to make money. If you want excitement, go to a slot machine, go to a roulette table or a craps table or whatever the case is. Okay. There's other things to do that are a lot more exciting than trading. This is a business. This isn't a hobby. We're just here to make money, to fund whatever it is that we want to do that we're passionate about. Okay. Whether it's charities, whether it's helping our families, whatever the case, buy a house, buy a car, all that stuff. It's no different than a job. We all work a regular job for those same reasons. Buy a house, buy a car, take care of our families. Okay. So that's essentially what trading is to me anyway. I don't look at it as exciting. Guys, there's a lot of other fun things I'd rather be doing than sitting on a chart. So again, put in the hours now, get your 10,000 hours of chart time out of the way as soon as absolutely possible to where this stuff starts becoming second nature. And over time, it takes less and less time to really sit down on a chart, sit down on a computer screen and do the work of the business. So, but anyway, yeah, let me know, guys, what you got. And I'll just go ahead and jump into a few of these assets over here. Pound dollar, the FTSE once again. So let's go pound dollar first. I know that's been a popular one I've been asked by Miss Andrea quite a bit, if she's in the chat. She's been asking about that one quite a bit. And rightfully so. It's one of the top setups right now. So trend, as always, is up right now. EMAs are in favor of it as well. We've yet to bounce into that overhead supply that I mentioned, that 4-hour supply set up from over here. Let's go one over here. Not that one, the one further back. Okay, the one higher up. So what I like about this the most, guys, and I know I've already talked about this, but I do want to recap it because I think it's important, especially when we're talking the momentum of this move. The reason I love this setup so much is the momentum out, number one. Okay, we broke all these structures over here to the left and closed pretty aggressively at the high end of that. One expanded range candle, two expanded range candles, three expanded range candles. No yellow candle for our volume spread analysis, but the volume inclined, meaning effort matched result. Now, on the retracement, I like seeing that the retracement is slower than the move out of the zone. That's important to me. Because if I have a zone that forms and I got, several candles pushing price up, if I have candles just drop straight down in less time, then to me that sounds like it's just coming in too hot and heavy. So I got to get a breaker of some type, and that's why I always talk about this short little consolidation to where it forms stop losses on both sides of the base. You get your swing high to take out that liquidity, swing low to take out the liquidity on the bottom, ultimately drop into the zone for a potential buy to the long side. Well, that's exactly what I'm seeing on the FTSE right now, the UK 100. So if I go over here to the UK 100, just review the trend. It's a little sloppy. There's a lot of wicks going on here, but the point is we're still getting higher highs, higher lows. The EMAs are in my favor. Okay, the daily is just fine for me. When we come over here to the execution time frame, I'm looking at this on a smaller time frame. So I'm looking at this zone as a 1 hour time frame right here. Kind of a collection of these two candles here, the red candle down, the green candle there. Wrapped a rectangle around it. I got 1, 2 stronger candles coming out that broke structure. So that turns this little batch of candles into a little bit of a bullish impulse move because we broke the structure here. Break and close at the very top, in fact, of the range of that candle. And now I just need a retracement. So if I go down to a 30-minute time frame and a 15 for that matter, this picture looks the same on the 30 and the 15. Now we're looking at our strong push up. We're looking at our drop. We see it slow down. We see it start to base. When this base happens, we get stop losses down here. We get stop losses up here. And at some point, the buyers or the sellers will win out. And oftentimes, if the banks want to push this along, they'll start pushing price out. So when price finally pushes out to the bottom, what happens? These stop losses get sucked up. This liquidity gets taken up right here. And then what often happens? We go test the liquidity on the other side of that basing structure. So that's what we got on this green candle here. Price pushes up. Take this liquidity here. And then the process can repeat. Now, sometimes, shut my phone up real quick. Sometimes this process can have several expansion legs. Like this is the definition of expansion. So we got contraction. We have expansion down. We have expansion up. All I need to see now is one more expansion down to take this liquidity that's under this swing low. And oh, by the way, drop into the demand zone for those unfilled orders to catch a bid to the upside. So I showed that was the same on the 15. On the 15, it looks a little bit more pronounced. You got a base. You got a little bit of a swing high to collect this liquidity. You've obviously got a swing low to collect the liquidity under that base, plus this base. Again, you get the swing high. Liquidity grab here, liquidity. I just need to see one more drop into the demand, and I'm a buyer. Because again, when this price comes down, if and when it comes down, it's going to collect the liquidity under this wick and also bounce in to the unfilled orders for a possible buy. That is Master Pattern 101, ladies and gents, right there. And for that matter, I think even if you go down to the 10-minute, it's the same picture. 5-minute, it's a similar picture, only you get a few. Now, here's the cool thing, guys. When it comes to these basing structures, these short-term equilibriums, those are fair market value spots. When I buy in a demand zone, I want that demand zone to be underneath the fair market value. And rewatch this a few times if it doesn't make sense the first time. It can definitely be overwhelming, but this is essentially how we start looking at liquidity grabs. When people say the banks manipulate and this and that, this is a very good sign of a possible accumulation. Because remember, they can't just drop price in and do a limit order like you and I can. They have much larger position size. If they do that, they might get a very small fill down here. Price is going to move away too fast, and they're going to get a terrible fill on the way up. We have the luxury. That's a benefit we have over the banks, over the smart money, right? When we start having multi-million-dollar accounts, $100 million accounts, the game changes. So the game for them is a little bit more difficult. They have to figure out a way to mask their orders, but also a way to get a decent price without getting horrible fill, horrible slippage to the upside. So that's what I see when I see these basings, these expansion legs, and then ultimately the trend phase comes somewhere after. It's the trend phase that I care about, and I want the trend phase to begin when we hit the unfilled orders from the demand zone. So that's just a little lesson I thought I would share since it was giving us a really good example here. But again, the point is on this 30-minute time frame, 15-minute, the point is we're buying under value. We don't want to buy overvalue. We don't want to buy breakouts necessarily, because this ultimately happens all the time. Think about these breakout buyers that bought just because price broke that structure there. All these people right here that pushed price up, some of them are underwater, depending on the size of their stop loss. And you guys know there's a lot of 5-minute traders throughout the world, 5-minute time frame, 10-minute, 15-minute. So this is why I try at all costs to stay away from breakout buys, because this inevitably happens every single time. You start breaking back down, and then the manipulation is what I'm looking for. So that's why I'm keeping an eye on this 1 hour zone of demand right here for all those reasons listed. But also, I do believe if I drop that down, what's 1 divided by 4? The rule of 4s I mentioned a lot, guys. That's 15. Okay, 60 minutes divided by 4, 15 minutes. So if I go to a 15-minute time frame, just looking a little deeper into this demand zone, this obviously is the whole thing is the 1 hour demand. But now I have a 15-minute demand, and I have a gap here as well. There's my gap, my acceleration gap, fair value gap. This is at least 2 sets of eyeballs that are looking at the same price point, the 15-minute inside of the hour demand zone. The inefficiency is what the banks typically hunt for, not the gap, the unfilled orders on the other side of it. And that's going to be the zone, the demand zone. So perfect example. I just thought I would lead off the show with that. Share that with you guys. If you have any thoughts on that, let me know. But yeah, that's bank manipulation 101 right there, guys, on a technical level, but feeding off of the psychology of retail traders. Okay, the so-called dumb money. Okay, again, it's a shark infested waters. The game we play, dog eat dog, and that's just kind of the game that the banks have to play in order to get their $1 million orders in, their multi-million-dollar orders in. But remember, we have that huge benefit over them to where we can just freely enter our trades anywhere at any time for the most part. It's a little different if you're trading penny stocks, but we're not trading penny stocks over here, right? Trading FX and everything else. So hope that makes sense to you guys. Let me take a look at the chat over here. I got Euro pound. Okay. Euro pound. We got GU opposite with FTSE. Yeah, GU it's a very similar structure. It's just not quite completed what I'm looking for, like the pound or like the FTSE has given me. Right? I just went through the example on the FTSE, but yeah, just like to your point, the pound dollar is essentially the same thing I'm looking for. That's why I kind of drew this picture up over here on a 4-hour chart. Got to see it base, and I got to see a manipulation up, manipulation down to collect the unfilled orders underneath. Also, or collect the liquidity underneath, I should say. And then obviously the unfilled orders from that 2-hour zone of demand I pictured. So essentially it's the same thing. The UK is just ahead because we've already seen the expansion legs play out. And all I need now on the FTSE is just that last expansion leg down to the zone, collect the liquidity. So no, good stuff on that. You asked about Euro pound. Let's go to Euro pound. Euro pound was giving us a -5 over here on the top setup. So let's go look at that. Just barely made the height of the roller coaster ride. So on this one here, on Euro pound, trend is down. I like that. Remember, guys, always start with the trend. Always start with the higher time frames. It'll just make your life a whole lot easier. I used to spend so much time on the 5 and 15-minute chart when I first started this journey. Find out what I thought was a perfect setup, and then it lose, and then I'm like, well, why the hell did it lose? Oh, I didn't go and verify the trend. You got to verify the trend, guys, unless you're a reversal trader catching falling knives, which that's living on the edge if you ask me. So anyway, downtrend looking good over here. 4-hour chart. I have a kind of a similar picture. It's not really very well pronounced. If I look at this daily over here, you can see we've got a collection of candles. So this is kind of your basing structure. So drop, a little bit of a base, continuation on the drop, base drop, basing structure, which means short-term what? Equilibrium, fair market value. Buyers and sellers agreed or fought each other out, and they just couldn't move price. So at some point, price leaves. Okay, the sellers won. Now, if price comes back into this zone right here, we could look at it one of two ways. Daily supply. Okay, we can look at it one of two ways. Daily supply, which is that indecision candle. So this would essentially be our daily supply. How many candles is that? 1, 2, 3, 4. On my execution time frame, four candles is fine. When we start getting into the higher time frames, like daily, well, that's 4 days of sideways movement. I don't know. I don't really like utilizing the 4 to 5 to 6 candles on a daily. I prefer to just see one candle, 1 or 2 candles, basic candles. We start getting 4. That's 4 days. Price was relatively in that range. Do you think that's enough time for a bank to possibly fulfill their order? Possibly. So I say that to say that this is probably my least favorite thing to do is look at that daily supply right there. Instead, drop to the smaller time frame over here on a 4-hour and see that same consolidation. And rather than taking a trade in there, where's an extreme? There's an extreme a little higher up. A little bit more of an extreme zone. This is pretty much out of this sideways congestion down here. The black hole, I call it, guys. We had obviously a gigantic drop on Wednesday. We had all that fighting took place over in the Middle East. Some oil disruptions. Doesn't look like the Eurozone approved that. So if I'm just looking at a projection here, we've got a slow retracement up. We do have a supply here on a smaller time frame. I think I'm a little more cautious, though. I think I'd rather see a little bit better of a premium and possibly look at shorting this zone up here because the volume looked a lot better down here. Broke a structure here and then continued to drop. So for me personally, I would probably skip this zone right here and just go straight to the higher zone right there for possible shorts. Same thing. Would want to see a little bit of manipulation, a little bit of master pattern, a little bit of contraction, expansion, trend. Okay, this is the trend phase I'm looking for. I just want to see a little bit more manipulation. And perhaps this supply zone within this congestion, I think I drew it up on a 2-hour. Yeah, perhaps this could kind of start creating that manipulation, liquidity manipulation. But ultimately, I think I'd want to wait for that extreme zone a little bit higher up. So that's what I'm looking for at Euro Pound. That's why I've got my alert set there at 85.43. Yeah, I think that's about it right there. Euro Pound. US 100. Yeah, let's go look it down for you. Uzi Kachukwu. Uzi Kachukwu. I'm a stickler on trying to pronounce people's names right. So hopefully I got close. Dow 100, or excuse me. Yeah, UK 100. Go on over here and find it. Or Dow 30. Would you say Dow 30? What did you say? US 100? Talking about the NAS 100? I assume is what you mean. Yeah. Well, when it comes to the NAS 100 and the S&P, I do believe they're still off our list. I think Dow's the only one. Yeah, the +5 of that we've got over here. But we'll take a look at all three of them for you. Let's start with the S&P. We'll start from the top, guys. I've got, 9 minutes? Okay. So with the S&P, guys, we're still kind of in this mitigated supply zone area. So I'd be afraid personally of trying to buy, even though it's already been mitigated once and reacted to. We have since dropped into that 4-hour demand. That 4-hour demand caught a bid and is pushing us back up. So ultimately, I drew this up. Gosh, I guess it's been a week or a couple weeks ago. I think I would ultimately at this point want to let me just delete that. I'll just redraw it. I think I would just really would like to see on an S&P, if I had a reason to buy S&P, guys, I would ultimately want to see a break of all the rest of this congestion crap right here, close, and then a retracement. Maybe we find a new demand zone at that point. That's probably my least favorite one right now. If we're just talking about the three major indices here, NASI, it's kind of a similar picture. This thing's just, look at all this congestion. This is that black hole I tell you guys about. This is the equilibrium, the fair market value, just on a grander scale. Basically, it started back in around Cinco de Mayo, or maybe a few days after. That's sideways. That's nothing. That's nothing I personally want to be a part of. And again, the S&P, the NASDAQ, they kind of had that sector rotation. It kind of stalled out, whereas the Dow did not. It just kept going. It's the old heads, the old money that we've been talking about. Didn't really get affected as much by that. So, but it in its own right has kind of went sideways for the last week or so, week and a half. But nevertheless, I did talk to you guys yesterday, I think it was, about this 30-minute zone of demand I was watching, because the EMAs are still good, still looking all right. The stall has made the 8 start slowing down, so I don't really like that perspective of it. And we've technically kind of started creating some wicks as far as like, you can look at it this way. We had a swing low or a higher low right here, but then we failed to make the higher high. And instead we kind of turned over and made some lower lows. Talking about these wicks over here. But still, despite it all, I told you guys yesterday about this, and I'll go one short look about this demand zone here, this 30-minute. Well, which I liked. Okay, that zone was formed at the, let's see, that was the about an hour and a half before the U.S. Open, okay, back on the 14th of July. So that would have been Tuesday. A lot of volume steps in, start breaking some of these minor structures, but we didn't break any major structures. But the volume was the reason I wanted to keep an eye on this. So throughout the Asia session overnight, we had no volume because all the U.S. traders, the Wall Streeters, they're probably still partying. Okay, they're taking all their money, entertaining clients. Okay, they're probably not trading. They're probably getting drunk right there and doing other illicit items, right? The Wall Streeters. Although I've heard that they've cleaned themselves up a lot more than they were in the 90s. But anyway, point is they're probably not out trading. Asia session apparently had no volume. There's no volume. This is why we got to pay attention to what time frames for me that the zones are being created and the time frames that when our alerts go off. What is that a good time frame for that asset we're trading? Okay. I didn't think it was, and clearly it wasn't because there's no volume to pick up where the U.S. traders kind of created that zone. Now it dilly-dallied and went sideways. So there was at least some type of a little bit of buying in there, buying and selling. But then when the market opened today, we got just a big spike. Big spike. Let's see, that would have been the 8 o'clock, and then there's the 8:30. So this is the 8:30 open, and by this point the zone's been trashed, guys. But then the U.S. traders come in. What happens? Big bullish candle right out of the gate, created a bullish engulfing candle. If this zone were a little deeper, that might have been a good buy entry. But because the zone had already gotten pierced and all the unfilled orders had already been sucked up from that zone, okay, it basically makes it worthless at this point. Because we know we're going to have the volume when the market opens. That's a pretty picture. If this zone would have been down here like this, ooh, that would have been a good spot to buy, guys. But we didn't get that, did we? So I'm going to delete that zone. It's old news. Now, this is all in the context of being higher on the curve. Nothing's really changed. I still am going to stick to that 50,400 level if we get a drop, because that is going to be the bottom end of the curve. As always, guys, you can use your fib-based or trend-based fib extension and just set it up to where you go swing low, swing high, swing low, and it's going to break very simply down into thirds. Top third is premium. Middle third is where traders come to get chopped to pieces. Bottom third is your discount area. That demand zone is in that discount area. That's why I'm waiting on it. If and when we get lucky enough to get prices pushed down to that point. If not, we just reevaluate, especially if we break this structure up here. But currently, I just don't like the idea of buying in the top third. I don't like to diddle in the middle, number one. But what I hate worse than that is buying even higher than the middle, buying in the premium. Okay, so I don't think there's really personally any plays right now. But what would change this is if we break this structure and close up here above this supply zone, because then we got a whole new ball game. Then I would take my curve analysis and measure it from here to wherever it lands up here. That would be my new curve analysis. It's all about getting out of this sideways crap. If we get through that sideways nonsense, then that's where the curve analysis kind of resets itself. And then I'll ignore that 50,400 level all the way down here. We'll start again, and perhaps this candle that we just started today could possibly create something new for us, but we don't know that yet. So it's a long-winded way, and sorry I rambled on that, but it's a long-winded way of saying I don't have any play on US 30, really any of these indices right now because of that. So, okay. Yeah, there you go. Short on Euro pound. Okay. All right, guys, let's take a look at a couple of these other currency pairs before I got 2 minutes left, 3 minutes. Dollar CAD I know is on the list. Dollar CAD is still giving us that. I still think, guys, I still feel this is still a little bit in the uptrend. But the good news is that daily supply has clearly curled price back to the downside. And now we've bounced into that daily demand. So it's given us a bearish look. And I've been saying all week, I still need to see a break and close below that. If we get a break and close below that, I'll happily look for a retracement up to a newly created supply zone somewhere in this area. Whether it is the one that I set up here or whatever, we may get a new one created. So the dollar CAD is still a no play for me. But going into next week, if we get this break and close, it's game on, because at least it's answered half my question. Are we breaking an opposite structure or change of character? Right? Since we're in an uptrend and now we're trying to break a higher low, are we breaking either a low point, change of character, or in this case, are we breaking a demand zone? If we break a demand zone, to me, that's just as strong as a break of structure, because that tells me we sucked up the unfilled orders and we kept going. That's what I want to see, guys. That's the picture I want to see on dollar CAD, which is obviously giving us our number one bearish US dollar look. Okay, very bearish, -7. Remember, the scores changed. Okay, 4s plus 4 and higher is bullish, -4 lower is bearish. Still up to you. It's still up to you guys. Like Nick said, if you want to, stick with the old scoring system or just utilize this in order to get a few extra opportunities. There's some days we come in here and it's slim pickings. We got like 5 assets on the chart or on the top setups, 5 or 6 or 7 or 8, right? This way it can at least give us a few options extra. And those charts inevitably move too, even if they stay sideways or neutral, even if they stay neutral for a long time. Okay, charts still move. So again, overall I kind of like the change of scoring on it. But anyway, that represents the most bearish asset for the dollar, and I'm out of time already. And yeah, so that's really my opportunities I'm looking at. Possible UK 100 trade today on that smaller time frame, but definitely pound dollar and dollar CAD going into the Sunday open here in the States, and obviously Monday morning when the bulk of the liquidity starts picking up. That's going to be my top 2 going into next week. And I think I've pretty well covered it, guys. Thanks for the ideas there. Thanks for the tickers and such. And guys, we'll be back. Yeah, look forward to next week. I do believe, like they said earlier, I do believe we're going to start some earlier time sessions for to kind of appeal to the European area. Okay, get some of you UKers, some of the Englishmen, and all the rest of you guys over across the pond that support our work. Hopefully you guys will like this. Take advantage of it. That'll be starting, I think, around midday for you guys over there, midday for your trading session. So hopefully that'll be a good benefit for you guys overall. But yeah, good stuff, guys. We're ever expanding. So anyway, with that, guys, have a great Friday. Please stay safe. And most importantly, have a wonderful weekend. Relax. Peace.
Have you ever wondered how you could find more trades like this gold runner, or the S&P 500 breaking out to all-time highs, or this sell-off in dollar Swiss franc, which was a clean short opportunity? Well, all of these charts shared one major thing in common. They all had powerful macro fundamental catalysts driving price decisively in one direction, presenting a really strong trading opportunity. Hi, my name is Nick. I'm a 10-year trading veteran and the founder of A1 Trading, where we build market scanning software that help traders to track macro fundamentals, crowd sentiment, and the commitment of traders' data to best understand where institutions are moving their money. Our tools automate everything from studying jobs market data, inflation statistics, and economic growth metrics, bringing it all together into a scorecard or rubric that helps to spot better potential trading opportunities through our insights offered by the tools. So if you're looking to access our tools, stream viewers get extra discounts, and we're currently offering payment plans as an option for those who would like to split up the cost of our tools into a couple monthly payments. Alternatively, we also offer a free Edge Finder tutorial course, as well as fundamental macro course that can help you to learn the concepts behind the tools. Scan this QR code that you see on the screen right now to be connected with a real person from our support team. We have helped thousands of traders level up their trading through insights, dashboards, and automation. And we are passionate about this subject because having the right tools that hedge funds and proprietary firms keep locked in key is a powerful game changer for the average everyday retail trader. To explore our products, payment plans, and just to find out more and speak to a real person about this, scan the QR code that you see on your your screen right now. Alternatively, the link can be found in the live stream chat or in the description of the live stream. On our website, you can find a collection of both free and premium trading tools that our team has put together to help traders take their trading to the next level. Well, you might be wondering, how can your tools help me? Well, whether you're a swing trader or a day trader, our tools are meant to help traders of all different levels of skill, time frame, and traders that trade Forex, commodities, indices, stocks, etc. At the core of it is automation, simplicity, and bringing it all into a one-stop shop for you to scan markets more efficiently and build a curated watch list of potential trade ideas. So regardless of what you trade, we hope that our website helps you in some way. And if you have any questions, feel free to contact us using the contact button in the top right or the live chat feature available on our website. We also offer free courses on fundamental and technical analysis on our website, as well as a range of free tools like, for example, our risk calculators that can help traders to level up their trading without paying a dime. Our goal is that our tools and site help you in some small way, and we wish you the very best in your trading journey. Thanks for listening.